In today's video, I will be showing you how you can trade with a very high RR using the TradeATS indicator along with the fair value gap indicator which I have developed. So the first thing we have to look for is a contraction box. As you can see here, we have a green contraction box. What this means is that we are looking for oscillations between the levels drawn. Like here it's telling us we have projection for an order block. These are the order block projections in red after the green box. So we expect that the market will oscillate between these levels. So now we have, for example, the price reached this level. So when it reached one of the levels, what we can do is the following. It reached this level here. So what we can do is come here, and we are expecting a sell so it can oscillate to the lower levels. So we will put the bar at the yellow bar at the price bar which achieved this level, and then we can show the inverted sell value gaps, which is here, and we have to wait until the market will close below this level here, which it did here, and then when it goes back into the fair value gap, we can sell again, and this is our stop loss. Now this will by default give us 3R, but if we wanted, for example, to use it properly, what we can do is the following. We can, once the 3R is achieved, we can put the target at the forecasted order block, which is this one here, according to this indicator. So as you can see, this was reached properly, and here we have a good 6.5 R trade. Now when this was reached, we expect this to bounce back again. Now what we can do is the following. We will come here, and we are looking for a buy. So we are interested in buying. So here it will not be a sell, it will be a buy. Actually, I'm putting here the 4-hour chart, and here we are using 1 hour fair value gaps. So what we will do is we will look for a buy at these levels. So we are interested in a buy, and since it's coming down, we are looking for inverted. So this was here, the inverted. Now as you can see, we are looking for it to close above this one. Here it did not close above this one. Now one small trick I noticed is that actually if you also wanted to use the normal, okay, you can see we didn't have, like in the next 5 bars we didn't have. So here if we wanted to look for another trade, since this touched the low again, so we can also use this one. Now as you can see here, we had a trade, so we will focus on this trade instead of this trade. Why? Because it touched the low, and then it gave us a close above the fair value gap, as you can see, and then here we have the stop loss. So to clean things up, we are interested only in this one. It closed above this fair value gap. We have the price coming inside the fair value gap again, and this is our stop loss. As for our target will be based on the highest liquidity. Now one thing you can do to maximize profits, you can first, actually we have something higher than this. We have to wait. If this is broken, it will give us this extension forecast. So what we have to do for maximum results is put our target on this one. Now once the price reaches liquidity lines, like in this case, what we can do is the following. We can put this here, and then put a sell inverted. If it can close below it, then we just exit. So here it couldn't close below it, so it continued up, and now here it couldn't close below it. So until now it didn't close. So if it can close below this one, we get out. Since it didn't close, then we don't need it. Okay, so the idea is we have to wait until this is reached, and it will give us the full target which we are looking for, which is here. As you can see, if it reaches this target, we will have a 22-hour trade. Okay, so this is how you can trade using the combination of TradeATS indicator and the fair value gap indicator that I have developed. So if you want to have a free try of the fair value gap indicator, you can comment trial in the comments below.